Hello, everyone. This is Craig with RedChip Companies. Thank you for joining today's event with DSS Incorporated, which trades on the NYSE under the ticker DSS. With us today, we have Frank Heisel, Chief Executive Officer and Director of DSS, Jason Grady, Chief Operating Officer, and Todd Macko, Chief Financial Officer. We will begin with a brief presentation in a moment, and then we will open the event for Q&A. I will keep everyone's lines muted throughout this presentation. Users may ask a question at any time by using the Q&A tool at the bottom of the Zoom window. Before we begin, please allow me to read the Safe Harbor statement. This call may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. With that said, I now turn the call over to the DSS team. Gentlemen, please go ahead.
Frank, you're on mute.
All right. Well, thank you, Craig. And thank you to the investors who are attending. I hope to introduce you to DSS and to who we are and what we are, and to update others about our progress. DSS, this team started with DSS in 2019. Almost 3 years ago, we started out on our mission to transform what was a backwater, I want to call it a trolling company, into what it is today. We started off about $16 million in assets with about 3 business lines. Today, we're at 9 business lines and over $250 million in assets. We have built a foundation for our growth and our success through a diversified portfolio of assets, which we've acquired through the U.S. and through foreign powers, with the probability of those businesses having a high growth sectors. These assets will offer us the opportunity to have innovative, scalable, real-world solutions that will create sustainable value for the DSS shareholders. Well, who are we? Well, we are a multinational operating business with 9 divisions, like I described. We have a product packaging division, a biotechnology division, a direct marketing sector, commercial lending, we have a securities investment section, alternative trading, transformation services, secure living, and alternative energy. We have offices in Hong Kong, Canada, US, Singapore, Australia, Korea, Thailand, and other parts of the globe. Right now, we're strategically set to acquire and develop assets that will enrich our shareholders' value through calculated either spin-offs or IPOs, and a shareholder sharing program that will reward our shareholders for their loyalty to our programs. With me, Jason Grady is our Chief Operating Officer and President of our Premier Packaging, and as also have online with us Todd Macko, our Chief Financial Officer. And with that, Jason, I'd like to pass off the next section to you, for you can orient our investors.
Jason, just quickly, I'm going to share my screen, the presentation that was put together for today.
Thank you. So thanks, Frank. And so for everybody on the call, really one of the most important objectives from our strategic business plan was our commitment to diversify the company's operating revenue. We believe it's imperative to transition the company into new business lines that will generate scalable recurring revenue, preferably in contemporary emerging growth businesses. To achieve this goal, we've continued to acquire, invest, or start up new business lines that meet this criteria. Adding additional resources and capital, products and assets to our existing business line is also imperative to that business plan, so that current operations can continue on their growth trajectory as well. Frank mentioned a few of those businesses, and we have 9 of them in total. A couple happenings within our biotechnology business. Impact Biomedical, that progressed on multiple fronts in 2021 with the advancements of key programs, release of positive studies, furthering of global manufacturing, and we anticipate announcing some of our first licensing deals coming here soon. Our decentralized sharing or our direct selling business, its subsidiaries through its partners, sharing services, HWH World, really help diversified and meet those recurring scalable revenue targets that we were looking for. And those are also in potentially high growth industries with high profit margins. Our consumer packaging division, Premier Packaging, where we provide custom packaging for consumer goods, pharmaceuticals, nutraceutical goods, food and beverage, in the photo market. We're advancing there. We've just moved into a state-of-the-art facility, and that business is continuing to grow. Our securities investment group, which was really established again to acquire assets and provide long-term scalable revenue. And then our commercial lending division, where through our operating company, APB, American Pacific Bank Corp, we have an integrated suite of financial services for a business, including commercial lending, credit, land development financing, inventory financing, third-party loan financing, and really addressing some of the needs of our direct sales companies that we're working for. So those are some of the advancements that are happening within the DSS business lines from an operating standpoint. One of the things that we believe is also keen on in these business lines is that the potential of these markets. So we've strategically picked these business lines because of their market potential. Back to direct selling for a second. It's $180 billion, fifth year double-digit growth. The new gig economy, compare that to the Ubers of the world and some of the others that are out there that are representing this gig model. Our consumer packaging, obviously there's a huge opportunity there with the move from traditional retail to online and the migration away from plastic packaging to paperboard packaging. It's a $1.3 trillion business projected in 2028. We hope to have a piece of that. Biotechnology goes without saying, it's $752 billion in the US alone. Our alternative trading business, where we intend to provide an alternative trading system to be able to exchange crypto and securitize traditional blue chip stocks. Our REIT business growing, our digital transformation, where we're building software applications to automate everyday processes, provide services again to our direct selling companies. It's a $1.8 trillion business. And then our renewable energy market, where obviously that's growing. There's going to be some government funding available there. We think there's a huge opportunity. We think it's the right thing to do for the planet. So we've got lots of exciting things going on at DSS. And with Frank, I'll hand that back to you.
All right, thank you, Jason. We also want to point out that we really have some exciting news. We believe our growth, especially in the REIT division. We've acquired 4 or 5 hospitals that are in process in that REIT. We've got about $99 million in assets there. I also want to stress and confirm that the lending section of commercial lending, APB, about $40 million in loans we project to have here by hopefully the next 60 days. And as well, then finally, what great things are going to be coming out and will be coming out, continue to come out of our Impact Biomedical section. So you're exactly right about the opportunities. Todd, would you want to go ahead and give us some information about the financial side, please?
Absolutely, Frank. As the slide shows, year over year, the 9 months ended September 31st, revenue is up 30% year over year. That coupled with an increase of equity, 160%, and total assets up over $219 million. So some perspective there from an assets perspective. In September 2020, we had $91.9 million in total assets. That's increased to $219 million in just 1 year's time frame. Of that 219, we've got $69 million in cash, which the executive team, board of directors, have putting to use to acquire additional assets, as Frank mentioned, in our REIT business, for example, to continue to grow and develop the companies and our assets. And again, here's just an example of how the company has grown since 2018. Total assets of $15.3 million up to $219 million in assets in just around 3 years, which is, again, the company putting its business plan into place, acquiring the assets that we need to acquire in order to generate that sustainable revenue that we're looking to do. And again, revenue, the number here of Q3 2021 is on par with prior years. We're looking to set a record year this year. Jason?
So just with that, if I'm sitting on the other side of the table and I'm an investor at DSS, I want to know where you're putting the money to work. So just specifically, guys, number one, we put a portion of this capital to work, as Frank just mentioned, in our AMRE facility, where we've gone out and acquired almost $99 million in assets. American Pacific Bank Corp, we've got $26 million in new loans as of September 21st. To customers with strong credit quality, diversified portfolios, and we anticipate another $15 million plus going out in loans in the near term. We've invested in our direct selling business, SHRG, the Happy Co, HWH World, right? We're expanding their portfolios and globalizing their businesses, opening them to new markets. And then fourth, we really have an investment in our consumer packaging division, again, where we have expanded our facility, our capabilities, in a new building, new manufacturing equipment to service the high demand that we're getting inquired from potential new customers. So those are really the four areas where we're putting the capital to work that we've built over through the last couple of offerings. Frank, back to you.
All right. Well, I do want to emphasize this. We have 9 divisions, but all of them are not on the same pace. All of them are in different industries which have different growth rates. And each of them are ahead of a schedule or at a schedule. There's usually a 3-year program we have targeted in our business plan, and each of them are different. Some of them are well ahead in income generating. We've talked about those. There are others that will fall into place this next year and then the 3rd year. So this is a 3-year business plan on the current assets. So right now we are poised, we believe, for substantial upside because we have 9 divisions and really 9 roadbeds that we are really excited at, exponential growth opportunities in real high growth sectors. So we're excited about that. We intend to generate our shareholder value and its liquidity through subsidiary IPOs or spinoffs. As we develop these companies and get them up and running and we accumulate the assets that will generate the revenue, we will spin those off and then retain an interest in those and then give some of our shareholders that value in that for loyalty. And that will also create not only liquidity for us, but liquidity for our investors. By that, we'll increase our shareholder value and our stock price. At the same time, we'll be improving our revenue. That's demonstrated by our history here. We'll be improving our net income as we get more mature and the businesses get more mature. And at the end, as we improve those maturities of the business, we will fine tune our EBITDA and make them extremely more profitable. So with that, that is a little bit about DSS. We have a lot of things happening. We expect there's great opportunities for us to continue to grow. We have deals, whether or not it's in securities opportunities or into our biohealth, that we're really excited that's going to be rolling out in 2022. So with that, thank you, Craig. Anyone have any questions?
Yes, thank you, gentlemen. With that, we will go to Q&A. The way we're going to do this is we've got a lot of people on today, so we're not going to take any voice questions. Thank you for your understanding. However, easily enough, you can type in using the Q&A button at the bottom of your Zoom window. And I see there's one person who has joined by telephone. If you wish to submit a question, you can write me at craig@redchip.com, craig@redchip.com. And I am checking my email continuously. So I will read out any question that I see in my email or in the Q&A box here for the DSS webinar. Starting off, gentlemen, well, I want to look at the Equivir. Talk about global patents and why you think that Equivir can get you this global patent application.
All right. Well, Equivir is a product that we've had in our portfolio when we first purchased Impact. It is already proven. The studies are in place and proven. And so we have already preliminary patents. It's already been approved in the U.S. and there will be applications in other sectors of the globe. We already know it's proven. We have a lot of third-party knowledge and interest about that product, Equivir. And I believe it is so further advanced that it'll be one of the first that we will probably have opportunities in the marketplace to license and to advance. It is a really a great product that we believe have many antiviral and other uses, especially for cold and flu and other viruses that may that the human body may entail. So we believe we have something there that's very, very rare, and we're very excited about Equivir.
Can you give us a breakdown of the revenue, or at least where the bulk of the revenues are coming from?
From DSS generally, right now, the bulk of our revenues are going to come right now are coming from three sectors. Historically, Premier Packaging has been the driver of our revenue or gross revenues. Now with the addition of our investment banking, our banking section, our commercial lending section with APB, that is a high revenue growth opportunity. That is interest income, that's fee income, that's commitment income, and we expect that to average certainly over 8% per year. The third is our REIT division, where we've purchased hospitals and medical clinics. All of those were designed with a typical business plan of an 8% IRR, and those are already starting to generate. So those three sectors are really creating the revenue now. We expect that revenue for the 2022 to also include biotechnology, which is Impact, and then hopefully the Securities Investment Management Group will also contribute in 2022. The others we expect to contribute in 2023.
We have a written in question here, gentlemen. I believe it's about Impact Bio. He writes, when will we see the bio IPO? I believe that means Impact Bio. Can you answer that one?
Well, thank you. Yes, we're all excited and waiting to get the Impact Bio offering out and the distribution of the shares. We had hoped to have it out by this quarter, but we do not. We have to wait until the SEC approves the filings and certain information. So we await their responses, and as soon as we get those, I assure everyone we're as excited about issuing those shares to our shareholders as you may be, and we'll put it out as soon as we can, as soon as we get the proper approvals.
DSS price has suffered because of past offerings and dilution, this person writes. Going forward, what is the need for capital through additional dilution? The market needs to feel comfortable that there won't be another down offering to rebuild credibility. Thank you.
All right, we currently do not have any intent to have an offering. We have, as mentioned, some cash in with us now. We have other opportunities that are out there. Our price, we do intend do what we can to help improve the stock price, but that is not going to stop us from wanting to grow. If we have an opportunity, we always want to have that growth opportunity. But it is not our intent to have another offering in the near future.
Being in 9 different business verticals, why does DSS believe Wall Street is not supportive? Do you believe there is a short position controlling your stock price? Do you think spreading out to 9 business verticals is prudent as opposed to going after the low-lying fruit in a few to begin generating revenues quicker?
Well, first, I do believe that the shorts we are impacted. Our stock price is impacted by the shorts. We see those reports every day. I would tell you that I think we're one of the most targeted shorts out there. We fight it constantly, trying to find ways to reflect that. Does investing in 9 different business sectors hurt us? It maybe hurt us from the investor knowledge, but it is not going to hurt us in the long term. Is it Berkshire Hathaway or Toshiba or LVMH? Any of those have the same problem. They're not in one marketplace, and we don't have to be in one marketplace if we properly give proper information and investor information about what we're doing and when we're doing it.
Thank you very much, gentlemen. Another exciting area for DSS with significant upside potential is that growing securities and fintech business segment, which includes the launch of a digital asset exchange. Can we elaborate on that?
Jason, why don't you tell them about the alternative trading systems and the securities, if you would like?
Glad to do that, Frank. So we are a part of a joint venture with a company, a well-established software company that is partnering with us to build an alternative trading system. We're building three key parts. There's going to be an ATS, there will be a dedicated broker dealer, and there will be an MSB for crypto exchange. So what our intentions are out of the gate is to tokenize blue chip securities and be able to provide an exchange to trade those securities. So if somebody wants to go out and buy an Apple stock, a Tesla stock, a Microsoft stock, they will be able to do that. Not only will they be able to do that in a token format, in a crypto platform, they'll be able to buy potentially a portion of that stock. So you may be able to buy 1/10 of an Apple share. If you can't afford a full share, it gives the opportunity and provides a niche for people that doesn't really exist in the market today. With that, we are also creating an MSB. It's going to allow us to trade cryptocurrency and provide that exchange as well. So again, high growth areas, recurring revenue, fee-based revenue, both of these opportunities will provide that for DSS.
You touched on this, Frank, in one of your answers, but let's look at it one more time. Why are you still looking for more businesses with all that you have now, writes a questioner? Isn't it now time to settle down and focus on these assets?
They're correct. That is exactly what our business plan is. We first is acquire the assets. The second is really infill. As we mentioned, as Jason just described, we have a securities group, but we still have to infill for critical operating needs or to maximize the profits of those businesses. So it's right now, it's much more infill than looking for new business lines.
Frank, if I could supplement there a little bit for you too as well. So we've gone very wide, and two things. Yes, we understand there is a lot of short pressure on this stock, and the only way to overcome that is to have operational success, and that's what we're intending to do with these businesses. We've gone very wide intentionally to be able to provide the horsepower that we need to achieve the revenue and net income goals that we have. 2022 and beyond are the years for us to go deep now. Now we're building out those businesses. We're building out their business plans. We're adding additional assets where appropriate, and potentially to not only get those businesses revenue positive, net income positive, but to also potentially position them for IPOs. So those are our intentions and why we've done exactly what we've done to the strategy that we outlined at the very beginning of this endeavor.
And just to give an idea of where people's minds are, what kind of questions we're getting, I'm going to sort of give a question here that's going to make you repeat what you've been saying before. But again, it's what is on people's minds. This person writes, what is the present short position in DSS? Where are we in the process of launching a first IPO?
All right, I'm not sure I'm qualified to tell you what the actual short positions are, but it's not, the reports I get would indicate somewhere between 30 and 40% on some days. What are the IPOs? I will tell you, I have aspirations, expectations for my team this year to have 3 IPOs or offerings. And one of them will be, as we've already announced, the Impact Biomedical. I'd love to see us grow and continue to track and grow our banking section, our commercial lending section, American Pacific Bancorp. And then third, I believe the REIT will be ready here sometime in the middle of the year for its rollout. And so if we continue our progression and continue the pipeline, those should be ready for 2022.
Thank you, gentlemen. A participant writes, you sell at a 1/6 of value. What are you doing about this? Can you address that, please?
Well, what we're trying to do is, like is indicated by Jason, we're trying to get the message out of what we're doing, what our successes are, what is our long-term plan, what is in our portfolio, because again, it's so hard for us to get all the information out about all the things we're invested in. You know, if we have 6 hospitals or medical clinics, not everyone knows that. Doesn't everyone know that we have an ETF fund that we're developing to bring to the market? Not many know about all the things that we have in the product lines over in Impact Biomedical. We had 4 new products when we bought that company. We have added 8 more new scientific discoveries to that. They're very, very exciting. how do we get the message out about the breadth of 9 industries with 40 different companies of all the things that we're doing in a short presentation? It is virtually impossible. And so we need to do a better job in getting the information out about our subsidiaries and what we're doing there.
A participant writes, do you believe we can grow fast enough before we have to secure additional funding at these low market prices of 60 cents?
Well, again, we have no interest right now of doing any further raise through the market. We certainly have had the opportunity. We've declined those. Our intent is to get the stock price back up where it should be, and now certainly over the $1.50 in the short term. And I believe in the long term, you'll see the stock grow rapidly. We think there's some great announcements and great things that I described already in 2022 that will help that, as well as things that we believe that can be announced out of Impact.
Thank you very much. Do you believe the current share price is a fair value? If not, what do you believe the current share price should be?
Well, I just indicated what I thought it should be. I think it should be over $1.50. Is it a value? If you look at the amount of cash that we have in our subsidiaries and the amount of action and the assets that we have at $219 million as of the 31st and maybe more for the year end, the math speaks for itself. If you take the number of shares outstanding of what the assets we have, we are very undervalued.
In that vein, gentlemen, could you, to wrap up here, give the essential value proposition? Why should investors take an interest in DSS right now?
I'll restate it. We are poised right now for a huge breakout in 2022. We have huge upsides in the industries and the roadbeds that we're in. We are in the things that you want to be in. I don't care if it's direct marketing, if it's in lending, if it's in biohealth. We are in those roadbeds. We're well prepared for the 2022 and 2023. We want to generate shareholder value. We want to do it for both us by issuing IPOs and spinoffs that will give us liquidity. It will give the oil investors liquidity as well through our model. We want to increase our shareholder value and the stock price by doing that. We're going to increase our revenue and our top line gross receipts this year. We're going to certainly improve our net revenue as our businesses mature. And finally, we're going to improve our adjusted EBITDA that will also help improve our stock price and our shareholder value.
Thank you very much, gentlemen. For more information on DSS, reach us at 1-800-REDCHIP. Please visit the information page created by RedChip for DSS, dssworldinfo.com, dssworldinfo.com. The company's website is dssworld.com. Thanks again to our many participants on the call today, and thank you very much to the DSS team.
All right, thank you, Craig.
Thank you.
You're welcome. Thank you.
Thank you, everybody.
Take care.